And so when they say no, I just go with those other ones. I try to figure out what's going to work for them. And, then sometimes they still say no, a lot of times they still say no. However, then you just follow up with them, call them next month, call them 3 months, 6 months. And I keep saying call. Yes, people, we got to talk to these people. It's not all about, oh, I could just send them a price in an email. And if they say yes, great. If they don't, great. You're just throwing stuff against a fan, wallers to see if it'll stick, right? That's not the business, right? You can send out numbers all day long. We're not quote machines, right? We want to get a deal. If I'm sending you a price as a broker, you negotiate the heck out of it, right? That's your job. And that's skills to be learned also is the negotiating side.
And deals are made on the phone. Emails are for confirming details and things like that, but deals are made on the phone.
Lots of phone time.
And you get information about that you wouldn't get on a form, right? Why they sell the loan, what are the numbers, hey, situation, hear the tone of voice. You can get a grasp of what's really going on and more than just the asset itself.
Absolutely. And you can hear their tone. And I'll tell you this, and whether it's a bank that you're buying it from or a mortgage company tape or an individual note holder, there's stuff they're not telling you, right? And our job in due diligence is to peel that onion and find out what they're not telling us, because there's always something they're not telling us.
Yeah.
Right? Oh, you showed this to other buyers. Why didn't they buy it?
Yeah.
Well, I don't want to tell you. Well, I'm going to find the same stuff, so you might as well tell me right now.
Yeah.
Right. And not waste either of our time. So
how many assets do you see are actually serviced by a licensed servicer?
Half, maybe half. Yeah, like some states
more than
require.
That's pretty good.
Some states require it, like Arizona requires that if you carry back a note, it has to be serviced by a licensed servicing company. Yeah. And other states have similar rules, but note holders, again, they carry back one note in their lifetime, right? It's not their business, and they just get the payments every month. And these days they get Cash App or a Venmo or a PayPal or something, and that's where we get the payment histories from. But I would say about half already have a servicing company in place, right?
That's pretty good, actually.
Yeah, I'm kind of surprised by that, right? Most of these are backwoods kind of deals that just happen and whatever. How do you deal with, are you licensed in all states to buy debt, right? There's certain states out there that require a debt buyer to be licensed. Do you do that or without going too far?
This is seller finance notes. The only state that I know of that has regulations on brokering notes. If you're buying them for yourself and you keep it full term, you're not a broker, you're a buyer and a holder. And that's one thing. But if you are going to broker them, the only state that I know of that has regulations is California. California requires that you have a real estate broker's license to broker notes. And that's hard for some people to swallow because there's a lot of notes in California. Gotcha. I have my license there because I live there and that's where I started. So I just got it, don't need anybody slapping my wrist or checking up on me. But other than that, as far as I know, I'm not a licensing expert, but as far as I know, you can broker notes everywhere except California if you don't have a California real estate broker's license.
Yeah, that's cool.
Yeah.
And classic California.
Yeah.
Well, let's not get into that. This is a business call.
So I'd like to know, give us your worst story you've ran into where it just was bad, or your worst mistake, even.
I try to forget about bad things that happen. Even like an argument with the wife, last week, I'll forget about it because it just drains your energy and stuff. But the worst successful one?
Yeah, and just the fact that lessons for others who are watching and saying
successful, meaning I purchased it. The worst one, there's this I'm really struggling. I have other people's stories of their worst deals, but buying what you thought was an owner-occupied single-family home, a note on an owner-occupied single-family home in Oklahoma, and it turns out that it was built out of hay. was a
Oh,
hay,
no
a
way.
hay home. There's a process. I looked it up. There's a way to do it, but it had burned down and they didn't have insurance.
Oh, no.
But again, that's not my story. That's an associate story.
That's a
But
new one.
yeah, my worst. I've had there are transactions where you're like nail biting, wondering if it's going to get to closing or not because of title issues,
Yeah.
or because the note payor is not friendly with the seller of the property. Right? There's a little battle going on. They don't have a good relationship. They hate each other,
Yeah.
and it gets sticky. You know, it gets stressful on our part because we're like the mediators trying to make everyone happy, and things like that. Gosh, I really wasn't prepared for that question. I don't have, even like my 2 foreclosures, I had a windfall on them. So,
Yeah.
you know, those aren't even bad stories.
Have you lost money
nightmares
on a deal?
happen. I think
Have
the
you
nightmares
lost money on
happen.
a deal?
Oh, go ahead.
Have you lost money on a deal?
No, never. Why? Because I purchase it properly.
Yeah.
Right. If you purchase it, if someone says, hey, this is how much I'm selling my note for, and you buy it for that price without doing your due diligence, your own due diligence, you know, it's a crapshoot. You're taking a risk. You're being a speculative investor at that point.
Right. Right.
Oh, is this a good time to do that before we're
Let's do
almost
that.
done?
Yeah, we've got not a lot of time yet left, but yeah, let's look at that.
Let me, I'm going to share this real quick because I really want your listeners to know the difference. I'm pretty sure it's this one. Value-based investing versus speculation.
Okay.
I learned this from this big, thick book. This is Graham and Dodd Security Analysis, McGraw-Hill. This book is huge. Look at that, half my face. And it was written a long time ago. And it's a lot about stocks and different things like that. But it really stresses the difference between a value-based investor and a speculator. A value-based investor, I'll just read this off because I think that'll go quicker. A typical note investor seeks an investment that provides current income, preservation of capital, and growth potential with minimal risk. The typical note investor seeks a relatively safe, secure, trouble-free, cash-flowing investment. This is me. What do value-based investors want? EPI. This is a phrase I've coined. EPI stands for extreme passive income. Extreme passive income because the check comes into your box every month, or you get your ACH payment deposited every month, and there's no one calling you up about toilets, termites, taxes, or tenants, right? Extreme passive income. Value-based investors want to take advantage of the power of compounding, right? What is that? When you've gotten a loan in the past and you signed your truth in lending document, and it shows you're getting $100,000 loan, but you're going to pay the bank $272,000. That's the power of compounding. That's what we're taking advantage of here. We want preservation of capital. We don't want to lose money. We want minimal risk. There's still risk. We just mitigate it. We want a relatively safe, secure investment for the long term. Would a value-based investor buy non-performing notes? Absolutely, but not for the prices that speculators would pay for them. Sure. Let's talk about speculation. A speculative investor is as follows. A speculative investor knowingly assumes the risk of incurring a large loss if he or she believes the possibility of a large gain exists. Okay. The speculative investor understands the risks, expenses, and the time involved in the investment. He thrives on the concept of the greater the risk, the greater the returns. Speculative investors want a home run every time. They'll take large risk for the possibility of large profit. Will use their last dime with a promise of huge gains. Will pay little or no attention to the downside risk. Will abandon strict standards of valuation and risk aversion. These are the differences. These are the two types of investors out there. And I can go on and on about this for an hour or two as well. But I really want people to start thinking. I think that's one thing I got out of the conference at Paper Source last month when we met and we talked, is that people want that quick buck. They want to make a decision. They don't want to do the work. And they get away from what a real investor should be doing, which is knowing what they're investing in. You know, crypto, for example. oh my God, the people that were raving about crypto last year, woo, I can't even count how many people. Where are they at now? Right? Catch me outside, right? How about that? It's down like 90%. And that's always been, crypto's always been and into the foreseeable future here, a very speculative investment.
Sure.
So I think at the conference where I was going with that is that a lot of people do not know their investor ID. They do not know where they're at. And it takes a while for you to figure it out. So while you're figuring it out, why don't you broker some notes, flip some to investors that know what they're doing, and see how the process works, and see if you like how that investor does it, or you like how that investor does it. And then you'll narrow it down to what I'm looking at your pictures, I should be looking up here, what you guys are looking at as far as what your investor ID is. So I wanted to get that out there for the public in general. You got to know what kind of investor you're in before you start investing in anything.
Absolutely. So we kind of hinted at it before, but you talked about looking out to the horizon here with the non-performing and just market conditions and all of those kinds of things. What's your take? What do you see coming?
Well, we've never seen nothing like this in history, right? All of these different things that are happening at once with the war in Ukraine and in Ukraine and the gas prices and the oil stuff and the inflation hitting 8.6, and then interest rates just bumped for a 30-year fix 6.1 now. 2 months ago was like in the 4s.
Yeah,
this is unprecedented how fast interest rates are going up. Now I'll tell you this though, been doing this for 31 years. I know when interest rates hit 6%, for me, my opinion, my statistics, when interest rates hit 6%, much fewer people are going to be able to qualify for conventional bank financing, and there's going to be a lot more seller financing coming up here, right? So I'm jumping up and down. I've been waiting since the early 2000s for right? Go up. As note investors, as performing individually held single family, I want interest rates to go up, because then they'll get closer to my yield and I can give a little bit better prices sometimes.
Yes, key item.
So I think that we're going to see more seller finance notes on the horizon. I don't know how all this is going to play out, with the economy and everything like that. We just dipped into a bear market. A recession is looming. And we're just going to continue to move forward. I'm going to continue to do the marketing, but I do expect that I'll be very busy in the next couple of years. Yeah.
So
very
awesome.
We'll see.
Jeff, I know April said that it gave your TWITA comment in the thread. So
Twitter, yes. Twitter's my little slogan I came up with. I thought way back when I watched Austin Powers, I was just like, that's what I'm talking about, right? Everyone says it now. That's what I'm talking about. And that's just a mouthful, right? That's what I'm talking about. I'd rather just say Twitter, TWITA, Twitter, and get it out. I use it when anything exciting happening, when something's positive, when I catch a fish, I'll shout it out. When I hit a good golf shot, boom, Twitter, Yeah. So that's my little thing, kind of like, I guess, branding, or whatever. That's my thing. I'm Jeff Twitter Armstrong. Find me on Facebook at @TwitterJeff on Facebook. Nice. So
Jeff, we're going to disconnect for everyone. I appreciate you coming on for the hour, giving us great insight.
That's really good.
It was awesome. Just that experience and knowledge is overwhelmingly awesome. And guys, feel free to reach out to Jeff. He puts out a newsletter that you can grasp so much great information from. Just stay in tune with them. Take a look up on LinkedIn, Twitter, everything else out there, and just tune in with them and learn from him. He's a great guy to learn from, and he's open book. So
thank you, Dave. Yeah, it's my website, armstrongcapital.com. I send out every Wednesday. I'm pretty sure you guys get it. Yep. I hope you get it.
Yeah,
a little tips and training by Jeff, just little tidbits, an article every month, things like that, just to keep that motivation going. Please feel free to sign up for that newsletter on my website. And questions, email me. I'll get back to you. Email is always best. I'm really busy on the phone. So most of those go to voicemail and I return phone calls, but
Yeah.
email me is best. You'll find it on the website. Thank you guys for having me.
Hey, thanks, Jeff.
Everyone have a good weekend. We will be catching up with everyone soon. But if you have any questions, feel free to take a look at the YouTube channel, Facebook group, and all that good stuff. And take a look at the note training that will be coming out shortly. Thanks everyone for tuning in, and we'll talk soon.
You bet.
Twitter.
Thanks, guys.